All right, welcome back for another episode of Carnivore Trade. Today is Wednesday, February 2nd, 2022. So we started off the month right here, took another winner, 17% on Fubo. Picked this one up at the lows last week, and we sold that today for a nice gain, over 17% on that one. If you want to get in on that, come join me at carnivoretrades.com. It's only $5 a month. Pretty soon it is going to go up. We're increasing price to 15. So if you want to lock in that $5 a month fee, come join now, because over the next couple of weeks probably we are raising prices. But anyways, nice move there. We were 16 for 16 in January, now 1 for 1 to start off the month of February. As far as the spiders are concerned, up 1% today here to the SPY intraday. A little gap higher, pull back into the gap fill area, and then just a chug higher really all day long. And really right now this market's driven by FANG again, which, you know, big surprise, right? Google having a monster day here, making a new all-time high, but coming off the highs, some profit taking there. And, you know, I guess apparently when you stock split, that makes you more valuable now. At least that's how the market looks at it nowadays. But, you know, overall, market is getting a nice bounce here. The spiders is having a powerhouse move off the lows. So we're seeing some bearish kind of throwing in the towel here, some bears capitulating a little bit, some of the hedges coming off. Look at the volatility index here, almost down to the 20 handle already. Look at, you know, the VIX is a spike index. Like, as fast as it goes up, it comes right down. It's pretty remarkable, but we're starting to see complacency come back already. And it's like a week ago, you know, a week or two ago, it was all, you know, the sky is falling. VIX is at almost up to 40, and really basically cut in half this week. So, you know, seeing complacency a little bit in the market, which, you know, this is typical of a bear market rally. Especially after the first leg down, everybody thinks the market's going back to all-time highs. But if you take a look at the hood, under the hood, Russell 2000 negative. On the day where the spiders were up 1%, Russell is down 1%. Qs were up 1%, Russell down 1%. Not a good look. Tesla, where's Tesla? If we're going risk on, you need to see Tesla pushing all-time highs or getting up there, and really making a robust move. Last 2 days it was negative. What did the spiders do the last 2 days? Oh, monster green days. Qs, monster green moves here. It's really all it is FANG. You know, Apple had good earnings, Microsoft had good earnings, obviously Google yesterday, and it's like, you know, FANG is recovering, but the rest of the market isn't doing so well. Look at IGV, cloud software, you know, struggling with that 20 moving average. You know, semis finally got a nice day here, coming into a resistance area here at the 20 and the 100. You got some pivots down here, but, you know, this is still far off the highs. You know, yeah, we're seeing a nice bounce, but again, to me, the story is FANG is recovering, and really everything else. I mean, look at ARK. Nice bounce off the lows. You know, that's a huge move there for you know, considering the size of the. It doesn't look like much, but I mean that's almost 20% right there, basically. But still can't get above its 20 moving average. You know, so it's not like we're seeing a massive rush back into these high risk, you know, high PE risk on stocks. We're still seeing a flight to safety. The Dow Jones is still the leader. It's still showing leadership here. Dow, you know, nice robust move off the lows here. And it is the closest index to all-time highs. The next closest being the spiders. And then after that, the NASDAQ and the Russell. So again, we're not fully seeing investors, you know, get head first back into this market. And I think that's important to note moving forward, especially when you consider this pattern on the yields that we've been talking about now, really for the last week or two. Look at this beautiful bullish inside bar on the 10-year. And I do use the 30-year, same thing. And when yields have their next leg up, and they will, it's going to take down these tech stocks, and it's going to take down things like home builders. Look at how weak the home builders. It hasn't even been able to get past this red bar high. Still below all 4 major moving averages. VNQ, again, you know, not a really huge bounce off the lows either. So again, if rates move up, it's going to affect these home builders. It's going to affect, you know, tech specifically. But everything that I'm seeing right now suggests that this is a, you know, a bounce. We're seeing the biggest, most safest stocks, you know, get the biggest bounce and have the best recovery, while everything else is kind of still, you know, in the gutters, so to say. Anyways, let's move on here. Let's talk about financials. We'll go over XLF first. So XLF did reclaim trend again. The higher yield is good for financials as long as the yield curve is not flattening. So that yesterday we talked about broker dealers reclaiming trend, getting back above all 4 major moving averages. XLF was able to do that today. XBD, broker dealers, a little bit of a pause day after a nice pop. off of the lows, so nothing too special going on there. JP Morgan here down 0.8%. This trend line here is going to be resistance. So if it can get back above this, then near term we can trade back up to that 160 handle. But this will be some good resistance, so we'll have to watch that on JP Morgan. JP Morgan's a big financial stock, and it is a leading indicator in the financials. Goldman struggling with that 20 moving average again. Getting back above this trend line here, you got a big gap here off of earnings. But again, also, if this can get back above the 20, then maybe you can go back up here. You get up to that 380, 383 handle, which would probably coincide with that 160 area on JP. But I just wanted to point out those levels as you always want to keep an eye on Goldman and JP. They are very good leading indicators, obviously big financial stocks. Anyways, XLE, what can you say? Up again. So just continues to be a powerhouse. Exxon reported yesterday. We talked about that. It had a huge move off earnings. This will probably have resistance around 75. I'm going to say, you got this red bar high on the monthly. That was a big breakdown in October 2018. And we haven't revisited that area. But so I would say, it's probably where it wants to head, honestly. So I could see some more upside in XLE. We have Chevron that's at all-time highs now. And it's, energy's just been a powerhouse trade. And we've been talking about that lately. And it's not really showing any signs of slowing down in the meantime. Crude finally having a red day for once. And but again, still made it a 52-week high. Just got shy of that 90 handle. See, 89.72 is the high on that one, and I think I had a level on here. Let me check my monthly. Yeah, I think crude can get up probably about 93. You got these pivots down here, but again, if XLE gets up to 75, that would probably mean you're going to touch $100 on crude, to be honest. And I think that's where the market just wants it to go. And when you get close to this close to that type of a round number like this, sometimes the market just wants to push it there because it just has to be tested. But anyways, crude having a powerhouse move. Also, take a look at nat gas, 14% ripper today, getting up to 550. So huge squeeze move in nat gas here. Just been all over the map. There is nothing to do with this trade right now. Maybe if it gets up to $6, you could take it as a scalp short, but it's, I'd have to do some numbers on this, but this has been all over the map as far as, look at this, you had end of November, you're at 550, dropped down to almost 350 in about 2 weeks, not even, then back up to just under $5, 475 in a month, then in a week down to, 375, and then from 375 to 550 in 2 weeks. So just crazy volatility here in nat gas. Amazing moves here. Anyways, let's move on here. Dollar index, continuing to pull back. Did test that 96 handle like I suggested. Did get a little bit of a pullback off of that. And we'll see what it does going into the weekend. I have a feeling it probably bounces Thursday, Friday. If that happens, you can get a nice tail candle on this and, potentially put in another little inside bar pattern here. But dollar pulling back, we said it was going to do that. You had a nice move here, and it had to back test the breakout. So nothing really out of the ordinary there. Gold not doing a whole lot here. You could make a case there's a slight bearish inside bar right here. We'll have to just see what it does here. Honestly, there's nothing to do with gold right now. Same thing with silver. It's trying to hang on to this trend line, but it could be setting up a bear pattern. Platinum, on the other hand, is still strong to get a nice pop today, 1.3%. So it's trying to consolidate underneath that 200 moving average, but it's probably got a little bit more work to do. See, get a nice move up here. Put in a little bit of a high pivot in October, and then it took you about a month or so for this to kind of play out to the downside, and we put in this high pivot on the 20th. So maybe we need 2 more weeks or so. That would be kind of like a symmetrical move there for platinum. But in any case, nice little inside bar there on platinum, and it is consolidating bullish. Palladium also stalling out a little bit, so this one trying to build a bit of a bull base as well, but again, probably has to do a little bit more backing and filling before it can get through that area. Copper did get a nice pop today, again, so it's hammering on that resistance again, but it's seeing is believing with copper here. So it's tried to break out a couple of times, tried to break down a couple of times, but it's just been in this tight range. And if we get a weekly close, I need a weekly close above 451 before I'm going to buy anything on copper as far as being a breakout. But we'll continue to watch it and we'll see what it does. But ultimately, it's just been in a ping pong mode for really a couple months now. Anyways, moving on here to Bitcoin. So Bitcoin dripping down a little bit here in the after hours. Markets are closed now, but again, kind of still has this bearish flag here. And again, this is another thing too. We talked about the weak underlying, you know, the spiders are getting a nice bid, but there's lots of weakness under the hood. You want to see Bitcoin, you want to see risk on. So you want to see Bitcoin popping, and Bitcoin is not doing that. Again, Ether though continues to outperform Bitcoin a little bit here. It is pulling back a little bit, but again, noteworthy. I don't know if it really means a whole lot, but Bitcoin has been underperforming Ether at least the last couple of weeks. But in general, they're all kind of looking the same here. Just this kind of bearish inside bar pattern here. This is a lot of support down here, so it's going to take a lot to break that. I think it probably needs to do more consolidating. But again, you guys know the upside targets. If it does want to move higher, it's 44 to 45,000 if it can get above this red bar high on a closing basis. Anyways, let's wrap it up here. Flip back over. There we go. Oh yeah, so spiders did get through this necktie here, so it just has been in a powerhouse move. You're probably going to want to go up and test that 50 moving average. I don't see it getting through that on the first try. We probably have some type of a zigzag pattern up here in the cards. At least that's what I have penciled in right now. But we'll continue to take this market day by day and just take it one step at a time. Anyways, guys, come join me at carnivoretrades.com. Again, lock in that $5 price while you can, and before it goes up. But anyways, guys, thanks for watching. Take care, and I'll talk to you all tomorrow.